So I've got to tell you, I'm not looking forward to the CPI numbers this week, nor to the Fed meeting. CPI will continue to tick down. Price increases will continue to abate. And the Fed will hold pat. And the narrative will be that the Fed has conquered inflation or is well on its way to conquering inflation, when in fact the Fed failed miserably. Given the stimulus we had coming off of COVID with the CARES Act in 2020, 2021, of course we're going to have slack in the economy, i.e. inflation. Anytime you create new money out of thin air, in which case we've created trillions coming out of COVID, and that new money is not tied to productivity, you have inflation. You've inflated the money supply. And so, of course, it was going to flow through prices of goods, services, various asset classes. The Fed ought not to have continued to pursue its QE program. I believe it never should have pursued QE at all in 2009 or at any time through 2022, when in fact in 2020, 2021, right through May of 2022, it was pursuing a robust QE program, buying back 120 billion of bonds a month, 90 billion of which were treasuries each month. And so the Fed played the role of dove. I mean, heck, the Fed's a perma-dove anyway, but they were an ultra-dove during that post-COVID period. So of course we're going to have inflation. So the Fed was slow to address it. And then what has it done? And we put a note out to this effect yesterday, to which I will link to in the show notes. It's modestly reduced the money supply by way of QT. Sure, it's lifted Fed funds, but I would argue Fed funds where it sits today is maybe at neutral, because I believe price increases are much higher than what's reflected in CPI for reasons I've talked about on this podcast before and reasons I've written about. And so maybe you have kind of a neutral real interest rate now. I don't believe that we have positive real interest rates now because, again, CPI is understated. And so this narrative that's going to come later in the week that the Fed has defeated inflation, has achieved a soft landing, it's just a bunch of BS. The problem has already occurred by way of the inflation we had in the second half of 2020, all of 2021, 2022, and that we continue to have, albeit at a lesser rate. And in order to correct the problem, you need to see deflation flow through the economy. So will that happen? It may. I fully expect we'll have an official recession in 2024. I believe we are in a recession now. Again, I believe price inflation is understated. I believe if you back out the real impact of price inflation, that nominal GDP number would take real GDP into negative territory. And I believe that's been the case all through 2023 and as well as through 2022. I believe we've been in a modest recession for that year-plus period, almost 2-year period. And I believe it'll get more pronounced as we hit 2024. You can see the banks pulling back the reverse repo numbers. That chart that we published last week has continued to tick down, which reflects that there is less surplus money in the economy for both bank and non-bank institutions. GDP continues to slow here in Q4 versus Q3. The economy continues to slow. I think you'll see a fair amount of job cuts announced after the first of the year, kind of like what we had in 2023. So wait for those Q4 earnings calls in the second half of January and the first half of February to see those job cuts. So I think that's coming. And we would have had, frankly, a hard landing in March of 2023 had not the Fed instituted its bailout, the Bank Term Funding Program. So the Fed could have had its recession. It just didn't want that flavor of recession back in March. And I fully expect that the Fed will re-up the Bank Term Funding Program when it expires in mid-March of 2024. You'll see them renew that for another year. So don't believe the hype, as they say, about the Fed having conquered inflation, because it's not true. And households know this. I'm just not sure that institutional investors are fully aware. That's all for now. See you next time.